Good evening, everybody. 71 in New York City. Jim was just saying he has 72 degrees there in northern New Jersey. And if I'm not mistaken, it was up in the 60s here today, but tomorrow it goes down to 19. This was the main reason I moved to Houston when I graduated from college, because you get this time of year and it would be a nice warm weather. You're outside ready to go, and then 3 days later it snows and stays cold and crappy for another 2 weeks. What has happened here? Oops, hold on. All right, there we go. Okay. BR, for two reasons. One, Sandy and I got married while we were in Houston, and her mother was in a nursing care home near where we lived, and I would come up here for 3 or 4 months out of the year to take care of my mother. And when Sandy's mother passed away, we decided to move up here where we could be closer to taking care of my mother, number one. And number two, I had 5 or 6 classic cars there in Houston, but you could never drive them because even on a cool night, the humidity was so bad that you worked up a sweat just walking from the house to the car. So I brought them all back up here to Pittsburgh. And unfortunately, when I combined the two collections that I had, it was about 25 cars. I'm down to about 15 cars because I've been slowly selling them off, mainly because with bad arthritis in my knee, I haven't been driving them very much. So, okay, so here's how we go back to observing the obvious. First, we can see we're in a downtrend. Let's get rid of that. Second, every time it comes back up to the indicator that we watch, the T-line, you can see how the Dow has continued to fail. So we know we're in a downtrend, and we've got the prospects of a wave 1, wave 2, wave 3 bearish J-hook pattern. So just the fact that we can't, or the Dow could not get up above the T-line, number one, was also an indication that the bearish sentiment was still around, obviously from the Ukrainian situation. So we saw that same scenario here in the NASDAQ. Downtrend, a potential reversal signal, a piercing signal. And then when they came back up above the T-line, it wasn't very convincing. And then we had the bearish engulfing signal. That kind of put the nail in the coffin that right here at the T-line, at this resistance level, when they opened it lower on Friday, they told us up, they aren't going up. And then today, when we woke up early, they were saying the pre-market futures were down 550 points. So that kind of put a inkling that the bulls were not around yet. But by the time the market opened, the pre-market futures on the Dow were only down like 100, maybe even less than that, 85 or something. But as soon as the market opened, you can see they were still selling it off, both in the Dow and the NASDAQ. Kind of looks like an evening star, except it has a doji. Whoops. Which one kind of looks like an evening star? Oh, before today. Not really. That would be more of your evening star. And then you can see when they took it back up, it wasn't a real signal. It was just an up day, and then took it back down. So all this was telling us was we weren't out of this trend yet. That if they were going to break it out to the upside, we better see some strength. But Friday, the pre-market futures are down. And then today, the pre-market futures are down. So you add all that together, more than likely, we're in a downtrending channel, which means at least here's your first target, and then here's your second target. Yeah, and the S&P 500, there's your bearish doji sandwich, again, downtrend. So it doesn't take very much visual analysis to say, they can't get up above the T-line, they're having trouble in this downtrending channel. Now it's pretty much confirming they're continuing to sell it off. So that's where 2 plus 2 is logical. That the reason we recommended Monday was there's your downtrend. There's where they brought it back up to the T-line. Doji, let's make this a little bit bigger. Doji, shooting star, Doji, shooting star, Doji, hanging man. Pretty indecisive, but there was the nail in the coffin, that bearish left-right combo right here at the T-line. So when you add all that together, we know that the bearish left-right combo is a strong signal. Lots of indecision, and then the final nail in the coffin to tell us we weren't going up through this level. More than likely we're heading down, and if that's the case, again, there's that scenario or that analysis, a bearish J-hook pattern. So you add that together, this was more of a doji over on the other indicators, but it was still a bearish kicker signal. And what was even more relevant was it was a bearish kicker signal in a downtrend. Was there anything else that we could see that might act as a support level? Now, let's see, can I do this? Let's just kind of extrapolate that. When they broke through that level, that was a pretty good indication we were wave 1, wave 2, wave 3 in progress because of the bearish kicker signal. AI. Oh man, let's get rid of all these now. This is just kind of observe the obvious. Once again, you're in a downtrend. And they took it up. They gapped it up. But where did they start selling? Right here at the 50-day moving average, turn it around. Now you have kind of a belt hold signal. And that kind of a belt hold signal gets confirmed by a gap down through the T-line. Look what they did today. Didn't sell it off, but they took it right back up to the T-line. And that is added confirmation that when they went back up to the T-line and they failed there, it was a good indication based upon our statistical analysis of using the, or what the T-line indicates. When they failed there, that told you they were still in a downtrend. So even if you're a day trader, if this opens lower tomorrow, the probabilities are they're going to be taking it down, maybe the same magnitude as that, so it still makes for a good day trade. So oh, I forgot what I was saying. I was reading. I know what it is. Evening there. All right. So whether you're a day trader or a swing trader, if they open this lower, we kind of assume they're heading toward the bottom of this channel. All right, so the 2+2 analysis is merely the fact that if you know you're in a downtrend, now you can start looking at the charts or scanning for the charts that are kind of confirming the downtrend. Roblex, when they gapped it down, they bounced it, but there again is your, how do I keep doing that? There's your bearish engulfing, almost a left-right combo, and where did it do it? Right smack dab at the T-line. So what could we kind of gain or glean from that? Wave 1, wave 2, wave 3 could be the same magnitude as wave 1. Wicks, same scenario. Which direction were you moving? Failure at the T-line. DH, there's your bearish left-right combo, somewhat of an evening star signal. Failure right here at the 50, close back below the T-line. Another wave 1, wave 2, wave 3 prospect. So again, this is just analyzing the patterns that usually get set up by human emotions or human investor sentiment, and just being able to put everything together of when to be short. So look what started the downtrend on this one. There's your shooting star doji gap down. Bearish best friend. Where might you start taking profits? Right in here. Piercing signal in the oversold area. But this is the reason why you want to know your signals. What's the nature of a decisive, indecisive, indecisive, indecisive? So you've got an indecisive uptrend, and you still have that same final criteria that has not been accomplished, which is a close back up above the T-line. This became a very opportune point to short because now it's telling you wave 1, wave 2, going into wave 3. So I'm pointing this out because years ago I would be sitting here thinking, oh man, I was long and they've got to take this back up. Instead of analyzing when I should be out of the trade, I'm sitting here holding onto a trade, hoping that it's going to go back up again. Well, now, as soon as I know what human nature is telling me, if I was long, and it gapped down, what's the first thing I want to do? When analyzing that they're selling this, close out the position immediately. What's the best strategy for scalping SPY options? Probably off your 10-minute chart or your 5-minute chart. There's your bearish kicker. Anytime you see that kicker signal, remember, the strength of a kicker signal completely disregards where you are in the stochastics. A kicker signal is going to tell you exactly what's going on in investor sentiment. Sandman, yes. The same signals, the same criteria. So if you're trading this chart, here's your daily chart. Here's your 15-minute chart. Here's your 10-minute chart. They're all the same criteria. The reason they're all the same criteria is because of the definition of candlestick signals or patterns, buying and selling during a specific time frame. Doesn't matter whether that time frame is a 1-minute time frame or a 1-month time frame. It still illustrates the same thing about investor sentiment. ONON, oops, I skipped one. I wanted to show KPTI. Bearish kicker signal. Information that allows you to be in the right direction at the right time, knowing what the strength is of a candlestick signal. Now, the reason I emphasize knowing the signals is because when I first started learning them on my own, there wasn't anybody around to confer with. Nobody was using candlestick signals when I first started learning them back in the late 80s. So it took a while for me to really become convinced that if I saw something like this, and I'm just happier than a pig in doo-doo, I'm in the right trade at the right time, and they do this, I had the same human emotions that everybody else did. Oh, maybe they're going to take it back up again. Steve Nissan, yes, was around before, around that time. And when I started learning this and found out that he'd written books on it, I read his books. But unfortunately, when I read his books, I didn't learn nor know anything more than when I started reading the books. And then I found out later that Steve Nissan didn't trade. So I said, wait a minute. I'm seeing things here that I'm actually working with or actually doing. And so you learn a heck of a lot faster. And you want to make decisions. Do you still trade on a 1, 3 minute, 10-minute? John, no, I don't. I used to trade the E-minis off of the 1, 3, and 10-minute chart in my younger days. And that's when I was just trading. Now I don't have time or the nimbleness that I used to. So, and I'm usually trading futures. Yeah, people would always ask me. That's not only ask me. I had in the early years, I had so many people saying, "I've got these videos from Steve Nissan. Could you take a look at them and see if I'm doing it right?" Unfortunately, I could only get through about 10 minutes of his videos before I fell asleep. So, like I said, should we be using his stuff, or is he doing good stuff? And I would always tell people, I don't like to make a judgment of a person until I've walked a mile in their shoes. Because of two reasons. If I say something to piss them off, I've got a mile head start. And two, I've still got their shoes. So anyways, I learned through hard knocks that if you see a kicker signal to the downside and you're long, you get out immediately. So I'll show a few of those of why the T line and a sell signal are so relevant. Now, so what was I doing prior to that? ON. Anytime you're in an uptrend, you're in the overbought area and you see a sell signal and a close below the T line, the probabilities are you're heading in that direction. Whoops. And we have the visual ability to see what the probabilities are if we're starting to see indecision or selling at a resistance level that everybody else is watching. And then it closes and it closes below the T line. When you add all that together, that's telling you, wait a minute, they've failed again. You can start going short on this. And what's the criteria for staying short? As long as you don't see a buy signal and a close above the T line. Oh, Magic, back when I was living in Houston, there was a guy, but they would fly me up. This was before we had Zoom and all that sort of thing. They would fly me up for a day, and I'd be on his radio show for an hour, and then they fly me back. And so as we were doing interviews, and I did that a couple of times, as we were doing interviews, he said that he used to interview Steve Nissan until he found out that Nissan didn't trade. And just like if you were paper trading have two completely different elements as far as what your decisions are. Because once you got your money online, you look at it with a much more scrutinizing perspective. So what we want to see is the 2+2 analysis. If we think the market is heading down and we found something that has a very strong sell signal, like a bearish kicker signal, that just gives you that much more credibility that that's going to be in a downtrend, like our PBUB, PUB-M. So there's that various J-hook pattern setup. So even if you miss this trade, you always can get ready for the next trade based upon knowing a wave 1, wave 2, wave 3 action. Java, look what happened at this failure, followed by a doji sandwich, followed by a doji sandwich. What's this doji sandwich tell us? There's probably more downside. What's this doji sandwich tell us? That probably this level right here is not going to act as a support level. Get ready for the continuation of that that downtrend. So it is important to know your A/B analysis, the signals. Remember what we said about a fry pan bottom? You can stay long until you see a sell signal and a close below the T line. Then you have a completely new analysis. So when we recommended going short on BPMC, it was based on as long as it didn't show a buy signal. It got a little bit testy right here, but not a real buy signal. Closed out the position. It was easy to reshort it if it came back down through this level. But overall, when this was heading up like this, the markets weren't going anywhere. So that T-line rule was your final criteria. So we also recommended going because this looked like a very good chart. Now, it opened positive and started trading positive a little bit, but what was the reason for not jumping into this on a positive open? Because the market was selling off. So if the market's selling off and you're looking at a trade that's not moving after it opened positive, you're probably, yeah, John, the markets were down. That told us we probably shouldn't be going after anything on an aggressive basis on the long side. We should probably be looking at the things that we scanned on the short for short trades. Sandman, I helped write the formulas for some Heikin-Ashi scans. Oh, boy. I want to say getting on toward 15 years ago. But Heikin-Ashi is more of a longer-term, general, kind of vanillized analysis. It's just telling you what the trend is. So I've done that analysis. I've done the analysis on every technical trading you can think of. And the most prolific, high profit, high probability trade setups are candlestick buy signals and the T-line. Okay, let's see. So if you had gone long on AGL today, would you have placed a stop at today's open? No, not necessarily. Probably the halfway point of this candle. So if I'd gone long on this, I would have closed it out. Now, where would I be buying this one? If all of a sudden the markets turn around and this came back up through today's open, that would tell me I've got a kicker signal, consolidation back to the 50 basically, and now they're taking it back up, confirming my J-hook bobble breakout. But if I bought today and it closed here with the market down, what do you think is the prospects of a good bullish move tomorrow? Probably not very good if the market continues to head down. Same scenario on GSM. Now on this one, if I had bought on positive trading, it probably would have closed it out when it came back down through the halfway point of this candle. Because what would be our expectation? Positive. Our expectation would be that it should be going in this direction. Why? Because we can see kind of your fry pan bottom breakout, wave 1, wave 2, best friend signal going into wave 3. So we are anticipating it should be going in this direction. But we're seeing the Dow trading off 300, 400, 500, 600 points, and this is trading off. You've got to ask yourself, is the environment for being long on this trade working? Probably want to say, no, this doesn't look good. Close it out and get ready to find something better. Things that were continuing to act well. AZNP, after the kicker signal, is still holding up reasonably well. Now, where would I set a stop if I was long on this one? Probably wouldn't want to see it come back down through this level, because that would tell me they've run out of steam right here. They're probably coming back to test the T-line, which is fine, until the market conditions change. So even though you might not have confirmed sell signals, you always have to have it in the back of your mind. If they're selling this market off, anything that has a bullish bias to it better completely stay bullish. If you start seeing some selling, that means it's being influenced by the market trend. Close it out. It doesn't keep you from getting back in when everything turns around. 2 days, 10 days, whatever. Okay, I think I did everything. Oh, the biggies. NVIDIA. Basically the same chart as the NASDAQ chart. Netflix, you can see, has never been able to get back up above the. So here's that illustration. Strong move, best friend. Another strong move. But where is a logical place to put a stop if they open it lower? If they come back down through that level, that's a high probability indication the bulls aren't there. Close it out. What's your worst case scenario? If you know the probabilities are bad, where do the probabilities become good again? If the next day they open it up and come back up through that level, all that told you was they came back, tested the T-line, and they were still heading up. But you don't have that as a certainty until you see what it does. Because otherwise, if it does this, notice what it's done ever since then. Been in a steady downtrend. Amazon, another chart that looks like the NASDAQ. Failed here at the T-line, in a downtrend, bearish left-right sandwich. Now you're sitting right about here. If they open this lower, what's that telling you? This level is not holding anymore. Wave 1, wave 3 could take you a lot further. Apple. There's kind of your dark cloud, even though you're not in the overbought area. What's your overall assessment? You're in a downtrend. And now they're taking it back below the T-line. Tesla, same scenario. You could pretty much draw a kind of a little trend line right down through the tops. And notice you had a doji hanging man close back below the T-line. Isn't really the other way around. The NASDAQ looks like big techs. Well, kind of, yeah, it doesn't matter which way you're analyzing it. Techs are all doing this, which makes the NASDAQ looking the same way. Or since this is being caused by a lot of the big techs, yeah, and so it's 6 of one, half a dozen of another, that basically they're selling off, showing that the NASDAQ's selling off. If you analyze it, they're all selling off. And this indicator, the high yield bonds being sold off. Oops, hang on for 1 second. Okay. Here's what clearly illustrates that if you see a candlestick signal and a close below the T-line, remember that simple rule. You see a fry pan bottom and you're in a fry pan bottom trajectory. You can stay long until you see a sell signal, not quite a sell signal, but it's selling, and the fact that they gapped it down through the T-line should have told you right away, this is not where you want to be, close out the position. Harry, hold until I tell Jim to do the double line. So the reason you want to get out on a gap down is because you're pretty much being told that the bears are taking control. If you're long, you don't want to be in a chart where the bears are taking control, so that you're not sitting in something like this in the wrong direction. anytime you're in an uptrend and you see a sell signal and a close below the T-line, close it out. All you have to do is remember one simple rule. If you're closing below the T-line, the probabilities are now going against you extremely strong. But that's when you want to be out of that trade. Now, why is it hard for us to come out of that trade? And I'm speaking for myself, because boy, I was smart, making money. This one's really going good. Oh man, gave back some of my profits. Thinking about, oh, I should be making a profit on this, instead of thinking about what is this chart telling me. And this is what the chart is telling you. So here was another one that we were going to go long on, because you had kind of a dip here, and it kind of broke out, but it didn't confirm. Whoops, now it was confirming, breaking this little downtrend. So if it started trading positive, it was a good time to be buying. But notice what happened. There's your bearish harami that tells you they didn't break out, and then they closed back below the T-line. That told you that this one is in a downtrend. And same scenario here on DWAC. You're in an uptrend. Where was your safety stop? You had a doji. Where was the most logical place to put a safety stop? If it came back down through the low of that doji, one, told you the doji rule, and two, telling you they weren't holding at the T-line, close out the position. Now, there is sectors that are still working, like the energy oil sector. Look at rig doing the little fry pan bottom breakout. That's where the probabilities start going in your favor that you're in the time. Well, what happened there? Not found. Okay. There's your fry pan bottom type pattern that broke out through the 50 and the 200. So again, that pattern is pretty much telling you which direction investor sentiment is building up, not necessarily being affected by the market trend itself. The buildup is that investor sentiment. Fry pan bottom type patterns, T-line crunch, breakout. Where do you think the next likely target's going to be? The next resistance level. Chris, yes. There's always recordings on these. All right, and so the other strong trades. Now I'm sitting predominantly short. But that doesn't mean every trade is going short. On rig, I would still just kind of watch it on the basis of that's not a big upper wick. You can see you close well above the halfway point of this candle. That's still just showing you bullish moves with some profit taking, but not anything that's telling you there's any reversal. IMPP. Well, for crying out loud, why is that not coming up over here? Huh. Bah, humbug. IMPP was to illustrate the J-hook pattern. But now you're at wave 1, wave 2, wave 3, about the same magnitude as wave 1, and they've gapped up. It still tells you there's no selling, but I always keep a safety stop right here. If it opened positive tomorrow, open of tomorrow's trading. APPH. Here's your fry pan bottom J-hook pattern. Look at your little kind of bullish flutter kicker. So this is why also, not knowing the signals, but what the patterns illustrate, again, sentiment. I always get asked the question, well, don't you consider fundamentals? And the answer is no. What we're considering is, what is everybody else's decisions based upon their analysis of the fundamentals? We're just analyzing what everybody's decisions are. So we don't have to be that fundamental analyst because everybody's. So here's run getting set up for that bobble breakout J-hook pattern. So this is something you would put on your list to say, all right, if for some reason the market turned around and started heading higher tomorrow, I want to have be prepared to go after some long positions. So I want to go after the ones that have the ability of moving in the right direction. Whoops. Bobble breakout on Maxon. Another one that if it opened positive, you got that bobble breakout. Whoops. Whoops. Well. Another J-hook pattern. Look where this breakout occurred. Look what's happened. So would I be buying this one? Well, if it opened positive, what do we got on this J-hook pattern? A doji sandwich after gapping up. That tells me wave 1, wave 3. Bloom. This one fizzled. So this one was setting up for a J-hook, but the fact that where they opened it, that kind of takes that out of the equation. And there's another kind of J-hook pattern. Look where it broke out. Look where it did the J-hook, right off your T-line. Let's see, the solars were acting well. So this is an illustration to say, well, do I trade or do I just go to stocks in that sector? Say maybe I'm better off percentage-wise trading those versus the ETF. So now I go to all the stocks in that sector and see which ones might have the best best leverage or the best potential movement percentage-wise. EVGO, Keyline Crunch up through the 200. Still could be buying this one. What is the solar ETF? It's TAN. I think this is the 3 leveraged one. Okay, let's see. All right, so here's what I want to illustrate is even in a down market, when you see, I got to make this bigger, when you see this happening and the market is trading off, something might be happening. So you want to pay attention to this. Same thing over here. Today, we've been following MULN because of this strong breakout. Then it's consolidated. Now, why do we keep following this one even though it fizzled? Because this told us there was new interest. That it's probably on any new information, it's going to have that interest stepping back in. So you want to keep an eye on this, because if they're trading positive, when the Dow is trading off 700-800 points, there is something happening that has nothing to do with what the overall market is telling you. There's something happening here that has nothing to do with what the overall market is telling you. INDO. One more in that area. MARTS. There was your pattern that you can see setting up. The reason you want to know the signals and the patterns, I can't stress strong enough, is that there's something going on here even though the market's selling off. But this was a warning or an alert that something big's happening. Let's see, can you comment on stocks that are working on the long side that are part of oil, food, golds sectors? Yeah, that's nothing that can't be analyzed clearly. We don't even have to use USO, but here's crude oil prices. They're still trading right now, and they're at 180 or 118.76, off a little bit. But there's your big shooting star, hasn't closed, so the oils are probably still acting well. There's EOG, Enron Oil and Gas. There's Exxon Mobil. I haven't checked Conoco. Still in an uptrend. So there are always sectors that will be acting well during any specific time frame. Gold stocks are probably acting well. Let's get rid of these. Some of the other golds. Whoops. So you can stay long gold stocks. I've heard that green and red engulfing combo called a railroad track before. John, I heard that a green and red engulfing combo. John, if you've got one that you could show me. All right, so let's take a gander here at a few more. There's your best friend signal on LLNW. So what would make a good criteria for buying this one? It comes up through that level. That's telling you we're now in a new wave. Vic, it was Mullen. Oh, Oh, this one? Okay. Yes, that usually means you're dead in the water because it negated that whole signal. So you'll hear me often say, buy on positive trading and don't let it close back below the halfway point of that candle. All right, so if you bought on this day, or you got ready to buy on this day, you kept you out, but if you bought on this day, you were back out on this day. Now I know that is hurtful. Say, man, I would think of this one was going higher. However, the one thing you have to keep in mind, just like the message that doesn't look good, this may not look good, but there was information here that got people excited or investors excited about being in this trade. That excitement doesn't usually disappear. Now that might be coming back. So that's your alert. That was your get out. Now you say, up, they're coming back in. Get ready to buy. If nobody buys options here, only stocks? No, Sonny, there's plenty of people in here that buy stocks in here. IPA, again, keep your individual ones. When I get done, I'll tell Jim to do the double line, and that's where you type in your question on an individual stock. So there's your fry pan bottom. There's your J-hook pattern. And observe the obvious. Where did they do your Morningstar signal? Right smack dab off the 50. So where do you think your next likely target's going to be? They break out through here. They're probably heading to the 200-day moving average. I think we already did AAPH. Yeah, we did that right after I couldn't pull up. That's your fry pan bottom. So right now you basically stay long. Until you see a sell signal. With the expectation you could go up to the 200. What was that? Sonny's question. If nobody buys options here. If nobody buys options here, only stocks. I don't understand. Okay, so what I'm going to do is, because it is very important to kind of get your mind wrapped around the fact that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. This is why we do our general training at least once a year. It's going to be done on March 26th and 27th. This is a 2-day training. And if you haven't taken it before, this is what you want to start with. This is what makes everything else make sense after that. So we start with the 12 major signals. We walk through all the criteria that creates those signals. And remember, out of the 50 or 60 signals, if you just learn the 12 major signals, they're going to be the ones that occur 99.9% of the time. And then you learn the different patterns. And remember, patterns are observable because that's how human nature works the same way after time. Then we go into everything else that is related to scanning for the top rank signals and patterns, your entry and exit strategies, your stop loss procedures, using the common sense that's built into candlestick graphics. So the one element that you're going to get out of this type of training is everything we discuss or everything we illustrate has the background fundamental basis of it's all just common sense put into graphics. So you don't have to know formulas, you don't have to know percentages. All you have to do is be able to visually analyze what the Japanese rice traders have provided for us for hundreds of years of what human nature normally does. So there's another potential bobble breakout fry pan bottom on Nova. So these are the ones that you can keep an eye on if things turn bullish. Now, in this market condition, if they keep trading this lower, I'm probably not going to be very aggressive on buy situations. I'm going to be looking for the ones that have high probability short potential. Billy, for example. You can see kind of the dumpling top. You see the gap down. It told you there was hard selling. A big bearish left right combo. And it broke this level. What can we infer from this chart? There's wave 1, there's wave 2, wave 3 could be percentage-wise fairly substantial. And Crocs, kind of the same scenario. This is just observe the obvious. Which direction is this going? It's in a downtrend, and every time it comes up to a resistance level, they're selling it off. It's still in a downtrend. So this one is probably the cow's already out of the barn. But observe the obvious. Where did this fail? Right here at the 200. Then there's your bearish doji sandwich. Then there was a potential of another bearish doji sandwich. So here is, even for the day trader, that when this started trading lower, and you had pretty good evidence that this was going to trade lower. First of all, the pre-market futures were showing that the market was probably going to be trading lower. And then if this started trading lower, what could you expect as far as a potential price move? Candle 1 and candle 3 being the same. In this case, you've got the benefit that once it broke through this level, which would have been about the same magnitude as that candle, you got some benefit to it. But the important facet to this was when it opened lower, you knew the probabilities were pretty strong it was heading lower. And KBH, Kaufman and Broad. Now here is that same scenario that if you go and you are analyzing the ETF, what happened there? Nail. Pretty good indication. They're selling it off. There's your bearish doji sandwich on a downtrend. Is this the best trade? That'd probably be pretty hefty. But then you just start going through the other charts in that sector. Toll Brothers. Bees are home. You want to find something where the probabilities are giving you, or you're finding probabilities that the percentage move may be a lot better in one of the individual stocks that is related to that ETF. There's your bearish doji sandwich, and look where you're sitting right now. If this opens lower, what can you expect? Wave 3 to the downside. Etsy. Observe the obvious. Kind of failed right here at the 50. Closed below the T-line. Where do you think the likely target everybody else is watching? This back in this downtrend. I could make a good 30% downside or better on that trade. So that's got a good sell signal or sell indication. What we're really looking for is the ones that have the powerful sell indications. There's your bearish kicker signal. Where do you think that one's heading? Probably back to the bottom of this channel. Now, will it get there? Who knows? That's the likely target. That makes it worthwhile. And that's telling you there's a strong selling you guys can short stocks on TD Broker? Because mine can't do that. Who are you using, Sonny? So the reason you're looking for that strong move to the downside, well. Oops. You're looking for the big signals. There's wave 1, wave 2, probably going into wave 3, but I thought I had something. Oh, that's a good sell. That's strong bearish engulfing. I would think they're coming back down to the bottom of the channel. But something like this is, there's a bearish kicker signal, and look what the results were. Very strong to the downside. Yeah, Sonny, that's another avenue. I'm trying to think of which ones are. It's like if you wanted to short the biotechs, Labu is the kind of the ETF that would be going long, but LabD would be the where you'd be buying a short fund. So you're buying this one with the expectation the biotechs are heading lower. What is quid? Oh, the short Qs, all right. Yeah, so there's a list right there, Sonny, of some of these short funds that you could be buying and not having to really go short on anything. And Yum, this is the type of chart you want to look for. Look at your combination here. Big shooting star failure of your dumpling top, and then right at the breakdown level, you got a bearish doji sandwich. What's your expectation from there? Wave 3 is going to be the same as wave 1. The airlines. Whoops. Well, what's going on here? The airlines, you can see already started. There's kind of your bearish J-hook pattern. Love, Southwest, heading lower. Alaska. So these are already gone. I mean, these already have had big percentage moves. What we're looking for is the ones that haven't had the big percentage move just yet. Look, ow. Look where this one kind of broke down. And how did it break down? There's your bearish flutter kicker signal. What's that imply? Wave 1, wave 3 could take you down a good percentage. Kind of the same scenario here. Look at your bearish left-right combo. Right here. That's kind of a nail in the coffin to tell you they're not taking it up. And then you had a left-right combo gap down. So the one thing I advocate is once you've learned your candlestick 12 major signals and your patterns, you might not concentrate on all of them. You just want to be familiar with all of them. You might concentrate on 3 or 4, like the best friend, or the kicker signal, or the fry pan bottom breakout, or your left-right combo. So what do we know about a left-right combo? The probabilities are extremely strong they're heading lower. And so if you see a left-right combo and they gap it down the next day, you don't have to sit there and wait to see what to do. You know you could be shorting that immediately. Another illustration on the left for the evening star signal closed below the T-line, gap down. So I'm kind of just pointing these out that when you observe the obvious where the sell signals occur and they start gapping down from there, that means they've used that level as a resistance level. And I don't know why this one doesn't come up. I think it was J-A-K. Yeah, we'll go on. So here's another one with a bearish J-hook pattern. Kind of implying now they're breaking down into another wave to the downside. So the comfort trading is that if we can analyze what's going on in the overall market trend, that allows us to be in high probability trades in the right direction based upon them continuing their downtrend in a downtrending market. All right, so looks like the Dow futures are up 95, but that doesn't really mean anything until, again, 10 minutes before the market opens. Okay, are there any general questions on candlesticks? No, hold on, somebody's asking what's the link for, and again, here's a link for the 2-day. Do you see any benefit in complementing candlesticks in the T-line? That's up to you, Frank. My contention is I keep the chart as simple as possible. That's why I don't want to make it too much more complicated than what it is right now. But if you have a good grasp on the cloud, put it on there. Anything that you can add to your chart that's going to improve your visual ability to see where prices might move to or see where the move is over, go ahead and use it. Now in my case, the T-line and the distance from the T-line is a very strong criteria for me. If you want to put the cloud on, if you want to put Bollinger Bands on, anything else that might add to your ability to see where a trend might be stopping or where a trend might be going to, put it on there. Now, the only reason I don't use it is we were going to try to market it or promote it, but I spent hours, maybe a ton of hours, trying to figure out what the correlation was between the cloud and candlestick charts, and I couldn't find anything that I could really be convinced to show other people, because if I couldn't figure out a good correlation, I wasn't going to push it on other people. Now, who was it that, was it Hubert? If he can show you how to use it successfully, that's what you want to do. Now, as you may have seen in his presentation, he has affiliated the cloud with candlesticks. So if he's got a visual that makes it much more easy for you to see what to do, go ahead and use it. Well, yes, I stayed in them only because of the fact that when they backed off so quickly, the options that I had bought weren't worth very much, so it was more beneficial to just hold on to them than close them out. For the exact reason of knowing, because I bought the Marches, which obviously are still weeks away, that when you see something like this, and then it backs off, there's a good probability they'll start it up again, because this was the alert to say something new was happening in that stock. Now, if I recall correctly, I think after hours, let me see if I can do this. After hours, they're trading up again. So you can see what's kind of setting up. So it closed here, and it's up here after hours. So not a big price move, but it's a percentage move. But it's up about 5 cents from where they closed it. Well, I probably wouldn't do a spread on that one. If this one is going to move, it's probably going to move a big percentage move. So, and they aren't that expensive. I'm not even sure where the, well, I can find out. Where, somebody look up to see where the March $1 calls are trading for right now. I imagine it's only like 20 cents or so. What do you think of M and W theories? Oh, as far as double bottoms and double tops? Okay, they're trading at 30 cents. Thank you, Frank. Double bottoms and double tops are relevant. We know that double tops and double bottoms work, but we've got the visual ability to see what signals are occurring that might create that double bottom or double top. Toss says March at 40 cents. All right. Basically double tops, tops, but also the fib ratio is used to measure them is what I meant. Again, John, you can use whatever things you want to add on to the chart. So we know there's double tops and there's double bottoms. This is not quite a double bottom, but if we see something set up as a double bottom, and we see that the second part of that double bottom is a bullish engulfing, that's a pretty good indication that they're buying again right at the same level of bottomed out before. That gives you that much more confidence that that is a double bottom. You can start going after it. If you see something like this, oops, I don't even know where to start on that. But let's say, let's see if I can do this. I took that one down hard. I was going to say, on some downtrends, if you just throw the Fibonacci retracement numbers on, where's your first target? Target 1, target 2, target 3, then the Fibonacci retracements, movement as far as earnings. We can find out real quick. Earnings are on the 30th. And I doubt if earnings are going to affect this. This, I think, is more of a research type firm. So just like in QuantumScape, you're probably not, the earnings aren't going to be that relevant because it's the research of that their new products, in both of these cases, of a solid state lithium battery. But once they get that done, the earnings don't mean anything. It's the prospect of what those earnings could be. Okay. Any other questions on candlesticks? If not, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. NCS came right back down to where you would suspect it would come to after it broke through a resistance level. So if you're long, it has to open positive and trade positive. If it opens lower, it's coming back and putting you back into the trading range. Else. Apple, you stay short on this one right now. And Sunworks, you stay long. Got a fry pan bottom. It doesn't necessarily mean it's going to go straight up, but more than likely you're now in an uptrend. Oh, I forgot to do silver and gold. Silver, as far as the April contract, you're still in an uptrend. Let me see if I can get something. There's your March contract. So it's getting a little bit toppy up here. And gold has moved up pretty hefty. It's still trading up after hours. So you can stay long, which means the gold stocks are probably going to be acting pretty well for the near term. We've been requested to do commodities for a night. We'll try to get that scheduled in here pretty soon, as well as another options. But I think because of so much information on options, that's probably going to be a full day training on a Saturday pretty soon. Clove, nothing great here just yet. Not until they get up through the 50. So look for your bullish doji or flutter kicker. Fuel cell was acting well today, staying up above the T-line. So you can stay long on this. Upstart, you can be going short on this one on weakness tomorrow. Especially if it comes down through that level. And net, well. Net, same thing. Yeah. Another one. If it opens lower tomorrow, look at your shooting star, hanging man, close below the T-line. If it starts trading lower, wave 1, wave 2, going into wave 3. NBR neighbors, Stay long, I'd have a safety stop at today's low. Shouldn't come back down through there after a doji. Tesla, we did. Stay short. Myrna, stay short. Now that it's broken through that level, got the possibility of a wave 3 to the downside. Merck, stay long as it stays above the T-line. It's still not a very vivacious return, but it's heading in the right direction. AN, stay short. There's your big candle to the upside, followed by that big bearish engulfing signal. Those are strong reversals. And Pulte, you can be going short on this one. UPS. You could be going short on this one. You've got risk. AU, stay long. Barracks Gold, stay long. I'd use today's low as my safety stop. And Wampum, stay long on this one. Deer, that's a big failure. So if you were long, I'd be out of it. I probably wouldn't be going short because you're probably in a sideways. Heska, if you like this one, you can stay long. See, once they came up through the 50, came back. If they start trading this positive, that means everybody and their brother can see that they came back, use the 50 as support. That means the 200 is your next likely target. XLE, just stay long. That's your energy sector. MMI, I would suspect they're heading with that gap down, evening star type signal. They're probably heading back down to the 50. Natural gas, just stay long on this one. Marvell. You could, again, look how the fry pan bottom breakout puts you in the right place. Stay long on this one. I would probably use the halfway point of this candle as my stop. And Hub, that's not working. Stay long on the utilities. Nothing wrong there. Above, you could be ready to buy this one. That's a good good chart in the electric vehicle sector. Ready to go short. It'd have to be a good strong short, otherwise that's pretty much a nothing chart. just not going anywhere. So if you're shorting it, make sure it gets through this level pretty quick. Dave and Buster's, if you're short, stay short. Again, the big reversal up here. Fuel cell we did. You can be buying this one on the basis that's probably eventually heading up here to the 200-day moving average. And this one you stay long because there's your belt hold signal. Told you it took out a little bit of the sellers. You can stay long as that stays above the T line. Google and Google look the same. You can, if you like this one for a short, if you're shorting it, make sure it gets down through this level. In Tesla, stay short on this one. OLED, that's kind of a nothing chart. Pay attention to it until it comes back up through this level. Right now there's no pressure on the buy side or the sell side. Rio is not coming up. Potential doji sandwich. No. We look, no, that's gold. Is that what you were looking for, GC? HUBS. Look where it failed, right there. I'd be shorting it, looking for it to get down through this level, which is pretty much right where it is. That's your long-legged shooting star doji with your stochastics turning down. Momo, you're chasing after something that's already left the barn. So when you're looking at a chart like this, you should be asking yourself, where should I have been buying? I should have been looking at something like this, a J-hook pattern. Oh, Bernard, what was the price on that one? I think non-members it's $4.97, members it's $2.97 if I'm not mistaken. Matador, be careful of the shooting star. I'd have a safety stop at today's low. And CPE, that's still not a very wild chart. However, you could be buying this one on positive fry pan bottom breakout. And Unisys, if you're anything, you stay short. Murphy, stay short. Chewy. You could start going short on this because of the downtrend. That'd be the only thing I would do. Yeah, Harry, you'd have to want to see weakness tomorrow. And Dash, that one you can get ready to go short. Wave 1, wave 2, very scoop type pattern going into wave 3. Myra, yeah, you can stay short on this one. Hubble, not anything real wild and exciting on this one. Oh, I don't know. Is that earnings tomorrow on Dick's? Ford is nothing right now. I wouldn't be long or short this one, mainly because you're kind of hovering too close to the 200. ILMN, that one you get ready to go short, hanging man, bearish confirmation. Look for wave 3 to break this level to get this type of move. 50 or the 200. Okay. Why would you want to get in? I really can't tell you unless they pull it back. So at this point, you're in the overbought area. It's already moved up, what, 100% plus? Why do you want to get in when you're late to the party on this one? Find the charts that look like this. So the only time I'd probably get into this one is if they brought it back to the T-line and did a J-hook pattern. Oh, let's see. Then hold off. We'll get the members price one in the chat room tomorrow. Oh, you meant my broker does not allow lead trade in middle of chart. All right, well, all I can tell you is I'm not looking for things like this. I'm looking for things like this. And Faz, nice little bobble. With option premium so high, is spreads best strategy to trade this market? I don't think option premiums on the long side would be high. On as far as short spreads, yes, I'd be more apt to do spreads on the short side because now that you've got a lot of them heading lower and possibilities of them going lower, I'd probably be less apt to buy straight out puts versus put spreads just to, because you're now at a kind of a bigger risk area with the stocks. A lot of these stocks selling off as hard as they have. Is this Kellogg's? Whoops. And that's pretty much sideways. That's to me is a nothing chart. How about selling calls? You could sell calls, yes. That would be a better strategy. Okay. So that's going to continue to make the short trades not much. We'll see everybody bright and early tomorrow morning in the chat rooms. We'll see you then.